So wealth management is basically the process of guiding clients through the process of investing the money. So it's basically all about how can I find a investment strategy, a portfolio for my client, which is suitable for his wealth goals, which can range from all the way from investments all the way to protection, even things like inheritance. So that's a space typically covered by the private banks or by independent financial advisors or external asset managers. So basically one of the trends we've seen in 2015 in Asia or even globally, that if you would have asked anyone at the beginning of the year what asset classes, what sectors or what investments going to outperform, there was a certain amount of uncertainty around that. And as the year has shown, even the trends which developed, such as the equity story in China, basically hit a very bumpy road in the end. So if at all 2015 has taught us anything, is basically that diversification and portfolio management is a very essential part of any investment strategy. And that's specifically relevant in Asia, which historically came more from a single investment taking a view on a certain asset trend, and it now is more and more moving in a portfolio trend and basically looking at the financial situations holistically. So basically the other trend we've seen is that investor needs are changing. Investors no longer accept to get a paper statement at the end of every month. Investors increasingly would like to see online direct access through all kind of devices, whether mobile or through the desktop, through the portfolios, and want to be much more actively involved in the portfolio design. So that's clearly also a trend which has been aided by technology. I think we've seen a couple of trends in the market and what has happened to technology. And one of these trends has been that what we call the bionic advisor. It is basically helping the financial advisor or the relationship manager to be more efficient and be more powerful. That's not about the robot replacing the human, but it's basically the robot helping the human to serve his clients better. And that's done through automation of certain aspects of the wealth management process. So that's portfolio construction as an example, that's the client communications through client portals. And essentially that's also where we've seen basically technology having a huge impact, because through new technology backends like the Amazon cloud, it is easy to deliver technology which fulfills these needs. What we've seen over the past couple of years coming to fruition is this whole idea of automatic portfolio construction. We've seen competitors in the US like Wealthfront or Nutmeg in the UK, which have been basically promoting that concept of robo-advisory. So robo-advisory is all about constructing investment portfolios automatically. And at the moment though, they're mostly invested in beta. So basically they have portfolios which follow the market and they're not truly customized. So what we believe the future is going to hold is what we call robo-advisor 2.0, which is basically truly customizing the portfolios through the use of artificial intelligence and really reflecting all the information we have about a client, and at the same time adding smart beta overlays. So basically strategies which protect the investor in case of a market downturn. So beta basically means that you're following the market. If you invested in a beta strategy, that means your portfolio is consisting of different pieces which are tracking the market indices. Typically you can use ETFs to replicate that. When we speak about alpha, that's basically the ability to outperform the market benchmarks or the market indices. And when we speak about so-called smart beta, it aims to have the best of both worlds. That's basically tracking the market when they're going well and basically exiting the market through an intelligent signal, a forecasting signal, when the market is about to go down. Well, we're basically built on a new technology platform. So we're cloud-based and we're basically using the Amazon backend as a back-end data center. And that allows us to really deliver all our services through a couple of access channels. So that's basically mobile devices, that's the web browser, and that basically makes the information always up to date and accessible from every point in time from any location. And that's very different from how wealth management systems or portfolio management systems have been designed in the past, where it was always the desktop as the integration point, whereby we basically have the cloud as the integration point and hence have a much faster time to market. We can easily white label and at the same time we can deliver much better client and user experience. It's all about having all the information at your fingertips at the point in time where you need it and where you need it. So whether that's at Starbucks or whether that's at the client's location, that's a relevant point. So it's very important to have the latest information available on any kind of device without having to go back to your office and synchronize sort of your local data store against the central data store. I think basically social media comes in two portions of the wealth management process. The one is obviously to attract clients and to generate leads. So it's very important to integrate the social media channel in everyone's marketing strategy in order to find new clients. The second portion is about updating the clients through the social media channels of basically what the general developments are. If you have a centralized data store and a big data store, you will be able to identify the trends and basically match it against several news or information and pre-classify them what's relevant for your client. So you can be basically always come across as being always up to date, and by funneling relevant information to your existing or potential client base.